Good morning. Welcome back to Venture Daily, the fastest way to catch up on everything that matters in tech, startups, and venture capital.
Founders, funders, and fans of the future, this is your morning jolt of insight, news you can actually use, and guests who know their stuff. I'm Josiah Simons.
And I'm Jackson Fordyce, and on today's show, Elon Musk is targeting 2026, just next year, as the year to launch a SpaceX rocket to Mars.
Public launches generated assets, letting users build and backtest their own hyper-personalized stock indexes.
And Nvidia, to no one's surprise, crushed earnings with $44.1 billion in revenue, up 69% from just last year. It's Thursday, May 29th. Let's get you smarter before your first meeting. Josiah, remember those old school blue books we used to write exams in?
I'm not that old, Jackson. But yeah, we did have those a few times in high school that I remember. The ones that made your hand cramp after page 2.
Yeah, well, guess what? They're making a comeback.
Really?
Colleges are actually bringing them back because AI is cheating so bad, it's getting out of hand.
No way. So instead of digital essays, it's back to pen and paper to stop kids from having ChatGPT do their work?
Exactly. Sales of blue books are on the rise everywhere, up 30% at Texas A&M, 50% at the University of Florida, and 80% at UC Berkeley.
Wow. So if you're a teacher listening and you're looking for a way to curb cheating, I can't believe I'm saying this because I hated these things in high school, but it might be worth a try to pick up some blue books, although you'd better move quick. I hear they're selling like hotcakes.
Yep.
All right, before we jump in, I want to tell you about Public. If you take investing seriously, you need to know about public.com. That's where you can invest in everything, stocks, bonds, crypto. You can even earn some of the highest yields in the industry, like the 7% or higher yield you can lock in with a bond account. Public is a FINRA-registered SIPC insured platform that takes your investments as seriously as you do. Fund your account in 5 minutes or less at public.com/venture. That's our link, and get up to $10,000 when you transfer your old portfolio. Paid for by Public Investing. Full disclosures in podcast description. Go down, check out our link, public.com/venture.
Yes, sir.
Really supports the show.
Public.com/venture. And they do options too. They do options trading.
They do options as well. That's right.
Yes, and a quick shout out to Content Stack, where we're filming right now. We're filming live at their experience center. I guess not live, but at their experience center here in Austin, Texas. We really appreciate you, Content Stack. But on to the first segment of today. Elon Musk says Starship is going to Mars next year, and no, he is not kidding.
SpaceX is going all in. They're moving engineers off other projects, investing heavily in Texas and Florida, and gearing up for more Starship launches, even after the last 3 ended in spectacular explosions, the most recent being on Tuesday of this week when Starship 9 disintegrated over the Indian Ocean upon re-entry.
Starship is a 400-foot tall experimental rocket built to carry cargo, people, and possibly even Tesla robots to Mars. And SpaceX says they are targeting a launch window in 2026 when Earth and Mars are closest.
That gives them just over a year to solve some insane problems, like refueling a rocket in orbit, which has literally never been done at this scale.
Oh, and while we're at it, they've also got a $149 million deal with the Air Force to develop Starship for rapid military cargo delivery around the world under a program called Starfall.
Between the Pentagon, NASA, and Musk's dream of making humanity multiplanetary, this is the biggest rocket gamble since Apollo.
I called my friend Aidan Gold for some insight into SpaceX's bold mission.
Yeah, my name is Aidan Gold, and I'm an investor at Ensemble VC.
Josiah, SpaceX is planning to get a rocket ready to go to Mars by next year. And the big question I had to ask Aidan was, do you think we'll actually accomplish this? And before we get to Aidan's answer, a quick heads up. Aidan and I actually spoke on Tuesday, just before Starship 9 blasted off for its failed test flight. And so here's Aidan's answer.
I think it's possible that they could get a rocket to Mars next year. I mean, it really depends on how these next flights go, including Starship 9, which is about to take off any minute now. But I think what we're seeing is, the first Starship launch between the second launch was about 9 months. And now we're seeing it every few weeks. And I think that cycle time is getting shortened down. So as long as they can keep iterating and keep practicing, there's a higher likelihood of them getting to Mars.
I'd be curious to hear Aidan's thoughts on now that SpaceX's 9th Starship test flight on Tuesday did end in failure. A few more details on that for anyone that missed it, though. The rocket launched successfully from Starbase, Texas, and reached space, but approximately 30 minutes into the flight, a propellant leak caused the spacecraft to lose control and spin uncontrollably.
Yes, and this led to a disintegration during re-entry over the Indian Ocean. Additionally, the Super Heavy booster, which was successfully reused for the first time, so that was a big win, did end up failing during its descent and broke apart.
And despite these setbacks, SpaceX views the data collected as valuable for refining Starship's design, which is central to Elon Musk's vision of enabling missions to the moon and Mars. And so I asked Aidan about this, as SpaceX doesn't seem to be fazed by a failed test. I asked him for his take on SpaceX's build fast, break things approach when applied to something as high stakes as interplanetary travel to Mars.
It's hard to know how it's going to go. I think the thing with these launches isn't like, oh, success or failure. Ultimately, that's the goal, is eventually it starts working very repeatedly. But you just keep learning things. I mean, the way the traditional media talks about these is, oh, it's not working, it's not getting to Mars. But what SpaceX is doing is they're like, hey, we know these first launches aren't going to work. Like, we know there's going to be failures. We figure out what failed when it happens, and then we make adjustments. So whether that's the heat shield or safety reliability or why satellites wouldn't dispense, every time they're learning something new, tweaking it, and it's about the iteration speed. So this is just another test for them to learn more, hopefully fix some things that went wrong last time with the second, like the booster, and just keep iterating.
Just said maybe the biggest challenge ahead for Starship is refueling while in orbit, something that has never been done before at scale, like you said.
Yep.
So I asked Aidan, from your vantage point, Aidan, is that still the biggest technical risk in the timeline Musk laid out, or is there something even harder to do?
Going to Mars is challenging in and of itself. I don't think there's like one specific aspect, but I do think creating the infrastructure to live on Mars, getting there and being self-sustaining, that seems like the hardest part to me. Like, yeah, the railroads of space and getting there, but building the infrastructure for food, water, living on a foreign planet that our bodies aren't designed for from a gravitational perspective, the radiation exposure, there's no atmosphere. I think just the idea of terraforming Mars is very complex.
For my last question for Aidan, with Musk pushing for a Mars mission as early as next year, do you think this is a genuine engineering milestone or more of a narrative move to align with shifting political tides, like the proposed $1 billion Mars project budget from the Trump administration?
I think it's the way you got to do it. I mean, you could spend all day, in simulations and testing R&D, but the best way to push things forward is to interact with reality. Interact with the real world. And by having a rapid iteration cycle, you're constantly getting new data and information and figuring out ways to improve. It's kind of like an evolutionary process in some ways. If you had a species that was locked in a perfect bubble, then it's not able to evolve. But if you have a company that's like out in the world and it's testing and it's learning, it's able to evolve, it's able to adapt. And that's what SpaceX is doing by sending these rockets up, is they're able to learn new things, change, iterate on the product. At the end of the day, the cycle time of building more Starships is a key part of the product. They're not trying to build one Starship every year. They're trying to build these kind of like cars, 10, 20, 30 of these Starships, a year. So this is like part of the process, is the rapid iteration cycle of developing these.
Thank you to Aidan Gold for being on the show. Josiah, do you know how ETFs work?
Of course, but maybe explain them to me again, just so I know that you know what they are.
Listener and viewer, lock in, about to read you a book about how ETFs work. Right, an ETF, or an exchange traded fund, is a type of investment fund that holds a collection of assets like stocks, bonds, or commodities and trades on stock exchanges just like a regular stock. They're often used to track the S&P or tech stocks, and there's lots to choose from your investment portfolio. Apparently over 4,000 now are trading in the US, but despite the quantity and variety of ETFs, they're not very personalized until now. So imagine this, building your own ETF with whatever themes you want. Maybe play it safe and make one with only Fortune 500 cybersecurity companies, or get risky with an American dynamism startup only category like I did. Or really have some fun and create the divorced billionaire bounce back ETF.
Ah, the Bezos, Musk, Murdoch play. Anyone now can build his own personalized ETFs on generatedAssets.com, a new feature just launched by Public. It lets regular people like you and I create, backtest, and soon even invest in custom indexes built around hyper-specific themes.
This is a big step forward with what the Public team calls 100% personalized investing. Powered by AI, these indexes go way beyond your standard ETFs. And the best part? You don't need $100,000 in a private wealth manager to play.
So, is this the future of investing, or just a fantasy football for finance bros? Jackson, I understand you sat down with Public's co-founder Leif Abraham to find out how generated assets work and what this means for retail investors.
That's right. Check it out.
Leif, co-founder of Public investing app.
I started by asking Leif to explain in his own words what's Public's new offering, Generated Assets, is and how the idea came about.
Yeah, so generated assets, which you can access at generatedAssets.com, essentially helps you to turn any idea into an investable index. So what that means, you literally go to the site, you punch in anything that comes to mind thematically, prompt the AI, and it will generate an index of public companies based off that prompt. And that can be wacky examples like CEOs with no hair, or it can be give me companies that have large user bases but very little ARPU. So there's maybe like expansion chance there, things like that. And the AI will go out and basically find companies that fit those criteria, that fit thematically what's there, and then create that asset. And once that index is created, we'll run a backtest and compare it against the performance of the S&P 500. And you will see if you would have beat the S&P or not.
It's pretty cool to see all the different creative assets people are coming up with and posting on X. I did another one. It was like companies that have gone against DEI initiatives. I think McDonald's was one of them.
Okay. Wow. Interesting. I didn't expect that.
Yeah.
Okay. And I think you were telling me, so you saw some on X that were pretty cool.
Yeah, but there's one that I saw was like investing in companies that are they're embracing fully remote work.
Yeah.
And then there's another one that was, I think that's the remote revolution one. And then there's another one that was specifically about like AI humanoids or robotic humanoids. It's like I can't remember the full name of it, but that's the
Returns
chart
versus drawdown.
I know, but it's focused mainly on like robotics and stuff like
Interesting.
that. Yeah.
Very cool. All right. And then how cool would it be like to see these indexes performing? Who's the best, who's the worst, and then maybe even throwing some of our own dollars at the trending ETFs.
Yeah, so I asked Leif about that and the role he expects community benchmarking to play. I was also curious if he envisioned a kind of leaderboard investing culture emerging around these generated indexes.
Yeah, so right now it lives as its own site for good reason. Number one, it's new, right? And so please go and poke all holes you can find and tell me about them. So in this current iteration, it is a little bit more, let's have some fun, let's find some wacky examples, let's have a leaderboard where you can literally see what are the best performing assets that people have created. Once you publish an asset, also that's from that point on, it will track the performance moving forward. And so in that little top list on the website, you can see essentially from the point of publishing how they have performed. Now, whenever someone sees a backtest, it's very easy to go into this mind of like, let me see how I can beat the S&P, And obviously, if I would just punch in Bitcoin right now and leave it there, you would look at a backtest and outcompete the S&P. And so what's really the interesting piece here is that it essentially serves a little bit as like a new age search engine to find companies in a like more thematic way. Because you might stumble over things that you've never known about by, looking for certain thematic indexes and so on.
My last question to Leif was about the potential risks that come with personalized assets. And so I asked him, how do you plan to balance user creativity with fiduciary responsibility, particularly when retail investors may not fully grasp the risks of ultra-personalized indexes?
Yeah, great question. First off, the sense here is that the AI is not doing something by themselves. It is just helping you generate an asset or generate that index that becomes the asset. You are still in control over taking things out, adding things in publishing or not publishing it, later on if you want to invest in it or not. You are, at the end of the day, you are still the end person that has that QA and the control over that QA, right? It's not that the AI just like goes off and does something and, you're off by the sidelines. That is like we're not in that state. And I think that is first of a very, very important piece. The other thing, these things will literally live like an ETF in your portfolio. So it's not about taking over your entire portfolio by this. This is really about coming up with certain thematic strategies that you can then kind of spin out as assets and then allocate, capital to as you desire as part of your larger portfolio construction, not as your singular portfolio that you have.
Leif told us that Public sees a future world of hyper-personalized funds and a chance for, quote, everyone to be their own manager on the horizon.
Right. He also mentioned that we can expect to see these generated assets available to invest in on Public, quote, at a high level in just a few months.
Hopefully sooner.
Yeah. So we look forward to trying those out in a few months. And you can too. Right now, you can try them out. Check out our description below and go play around with the new index feature at generatedAssets.com. And of course, don't forget to use our link, public.com/venture, to get your Public account started today.
Thank you to Leif Abraham for joining us on Venture Daily. All right, third and final story today. Nvidia just dropped Q1 earnings, and to no one's surprise, they crushed it. $44.1 billion in revenue, up 12% from the previous quarter. And get this, their data center business alone brought in $39.1 billion. It's a 73% increase from just last year.
Insane. And that's not just because of ChatGPT. It's cloud giants like AWS, Google Cloud, and Azure loading up on Nvidia's AI chips. The company's literally fueling the global AI race.
But not everything's golden. Nvidia took a $2.5 billion charge from unsold chips in China thanks to new US export restrictions. And they're expecting a revenue dip in that region just next quarter.
Still, the stock jumped over 5% after hours. Wall Street clearly thinks Nvidia's moat in AI infrastructure is deep and getting deeper.
CEO Jensen Huang basically said the quiet part out loud. Countries are now racing to build AI infrastructure the same way they once raced for electricity or the internet.
Which is probably why Nvidia is now worth over $3.3 trillion, second only to Microsoft. That's not just a chip maker anymore. That's the beating heart of the AI economy.
From one Nvidia's expectation exceeding earnings, I spoke with Yvette Schmitter.
My name is Yvette Schmitter, and I'm the co-founder and CEO of Fusion Collective.
Okay, so Nvidia just posted a 69% year-over-year revenue increase, driven largely by AI chip demand. So I asked Yvette, what does this tell you about the current state of the AI infrastructure market and where capital is flowing right now?
Those numbers are impressive, and they continue to be impressive year over year. I do believe that the market is right? And Nvidia is sitting in the pole position, they're leading, but I kind of say it's almost like Game of Thrones, right? They're sitting in the Iron Throne right now, and there's all these other competitors or noble families that are looking to unseat them. So they literally need to keep their foot on the gas. They need to be able to innovate and develop, but deliver, right? And the one thing that AI has taught us is that they're leading right now, but the architecture is going to change. So can they change as fast as they need to change and deliver, as well as anticipate what the customers and their competitors or vendors are looking for?
I also wanted to get Yvette's take on where she sees the investment opportunity in all this. And so I asked her, with Nvidia dominating the AI stack, where do you see room for venture scale returns? Are there specific layers of the AI infrastructure or adjacent markets you're watching closely?
Yes. No one's really talking about, in order to make all this happen, it's going to take an insane amount of compute. Compute power means data centers. And in order to build data centers, you need a lot of space and a lot of energy. And no one's really thinking about what are the downstream impacts. The power it takes to run a typical data center right now is as much power as 100,000 homes today. And the largest ones being constructed and the ones being planned, it's about to be 20 times that amount. That's the estimate that those new data centers are going to take from a power perspective. My question is, who is really thinking about, can the grid? No, I can tell you, our grid can't, right? We really think who is making more energy efficient chips? And we believe that that's an opportunity for Nvidia, right? If you want to be all roads lead to Nvidia, then you also need to be conscious about the ramifications of the environment and the communities that have to live near these data centers. We're really looking at the data center construction that's going to be required to power all these chips.
And for my final question for Yvette, given NVIDIA's explosive growth and soaring valuation, how are public market signals like this influencing your thinking on late stage or AI adjacent investments in the private markets?
They're on a sustainable path for right now, as long as they continue to evolve and grow. But as we've seen with AI, the speed of development, it's much more nuanced than rinse and repeat. So I do think that there is always a chance for a major disruption. A new algorithm is discovered, right? But for now, I think NVIDIA is in a good spot and they command, what the industry needs.
Thank you, Yvette Schmitter, for being on the show.
That's it for Venture Daily. Thanks so much for joining us this morning. We know you're busy, and it means a lot that you chose to spend some time with us.
And thank you again to Content Stack for letting us use your space. And if you like today's show, whether you're on YouTube, Spotify, Apple Podcast, or X, leave us a like, a comment, and a review. Throw us a 5-star rating if you think we earned it. And as always, we'll see you tomorrow morning on Venture Daily.